Well, there's a lot of uncertainty. And, I know that we're all looking for answers, but I think we need more time to see how this all plays out. I'm encouraged by what I'm hearing around the variant and the trajectory of that, but I think it's still uncertain. Yet the market certainly, and this morning is another indication, is kind of looking past the variant as something that's going to be slowing down economic activity. But we're still not completely out of the pandemic. There's uncertainty that comes from that, and that uncertainty is going to affect economic activity, and we're going to have to deal with that in some way. Against that, we clearly have real inflation in the economy. We've got a variety of problems, headwinds, issues that have occurred because we went into a pandemic. We shut the economy down, and we're turning it back on. That's really unprecedented. On top of that, we have shifts going on in fiscal and monetary policy to try to balance that. And so there's no question that this has been an unprecedented period, and so it's very hard to predict how we're going to come out of this.
So one of the singular questions we've been asking on the program this past week or so, given the emergence of this variant, is if the variant is mild and it's not something that we need to be as concerned about as I think the worst case outcomes would have been, does that mean that the market rips, if you will, or is the Fed on the other side going to keep that from happening? Meaning, what's more important right now?
My base case, Andrew, is we're going to continue to find a path past the pandemic broadly. Right. This will be endemic in society, and we're going to have to live with it, but we're going to find a way to live with it effectively, and economic activity will flourish. I don't believe we're in a new paradigm where the world will be fundamentally different, but it's going to take some time to move forward. In the context of that, I think that monetary and fiscal policy on a go-forward basis will have a bigger impact on the trajectory of markets than the pandemic will from this point forward. That doesn't mean there won't be periods of time where in the short term, a variant can flare up. There's news that affects markets in the short term. But the bigger issue to focus now is we've had unprecedented monetary and fiscal policy for a meaningful period of time, and we're going to emerge from that and unwind that. And that's going to have an impact. It's had a big impact on asset prices, market activity, and a variety of things. It's going to have an impact on those things as we unwind it and find the balance. And the thing that I don't have the answer to, none of us have the answer to, is can that be done in a smooth way where we take a little bit of the air out with not a lot of bumps and volatility, or are we going to have some bumps and volatility along the way?
Okay, you spend a lot of time talking to the CEOs of corporate America and around the world. And so when you talk to them about this and really talk to them about the issue of valuation, oftentimes about their own stocks, because they're thinking about whether they should be pursuing different transactions, what their own values are. What are you telling them at this point? Is this a fairly valued market? Do you say, look, you're valued very highly. Take advantage of the currency now. I mean, what's the thought?
Well, there's no question that looking at the market broadly, valuations are full in any historical context. And so if you're talking to companies that have a very, very strong currency, you're certainly encouraging them, if they have aspirations, to deploy capital and put that capital to work. This is an interesting time to think about it. Also, for most companies, borrowing rates and the ability to access capital through debt finance has never been cheaper. And so it's been a very, very good time to think about investing in business and deploying capital. I think it depends on the company and the particular company that you're talking to. I think the market has been very enamored with growth at all costs. Right. And I think we're seeing a little bit of the momentum come out of that over the course of the last couple of weeks. A lot of these businesses that have very, very strong top-line growth but haven't yet proven whether or not the business model really generates earnings over the long term, I think those are going to be a tougher slog. And I'd encourage those companies to make sure they have the capital in place to execute on their growth plans while that capital is available. I think some of that can rebalance in the coming months, over time. But it's not one size fits all. And you can look through the spectrum of the market and you can see different valuations for different businesses.
When you look, though, at what's happening, for example, in the IPO market, or frankly, the SPAC market, is that something that persists and continues apace? Do you feel it's slowing down? Do you feel it's speeding back up again? I mean, we've sort of had this undulating roller coaster.
There's been some undulation, to use your word. But there's no question SPAC activity has come way off its peaks. SPACs are good capital markets innovation. They're not perfect. There's been an evolution in disclosure in the process around SPACs. I think SPACs are here to stay, but I don't think we're going to regularly see the volume of activity and the surplus of activity that we saw in the early part of this year.
And when you talk about inflation, again, with clients, are you in the category of cash is trash and inflation's going to make that cash, not just worthless, but worth less? Or are you in the category of you might actually want to keep a little bit because there might be an opportunity coming?
Well, once again, not black and white. I do think that we've lived for a long time with inflation below trend. And I think one of the things that I'm concerned about, or I think about a lot, is people have kind of lost a historical perspective on what markets look like and what is normal. From a monetary policy perspective, what we've had over the last decade is truly unusual. And I remember, and I know historically, I've been around doing this, since the 1980s. I remember when we had a very, very different environment, and we could have a different environment again. And so I do think that while we've had inflation below trend for quite a significant period of time, there's a reasonable chance that we're going to have inflation above trend for a period of time. Doesn't mean it has to be like the 1970s. Could be, doesn't have to be. But when you think about periods where there's inflation, inflation hurts asset prices and it slows down your ability to make money with almost any asset. From 1970 to 1980, there was almost nothing you could own where you made money. Basically, during that 10-year period, oil and gold. Cash, you lost money. If you own U.S. equities during that 10-year period, you lost nearly 50% of the value of your holdings. So people forget the historical perspective. It wasn't too long ago, in 2004 to 2006, I think it was June 2004 to June 2006, that as the Fed normalized rates, they hiked 17 times in that 2-year period. Now, I'm not saying that's going to happen, but I think we're living in a world where people are forgetting the history, and this might be, a period that's different. We could go back to another period that looks materially different from this. And so I think you've got to be cautious and manage your risk appropriately for the distribution or the chance that that might happen.